All right, welcome everybody. Welcome to Talkin Investing. You're here with Tom and George. We got a lot going on this week. Welcome everybody. This was a red day for the market across the board. It was a red day for AI stocks. It was a red day for Bitcoin miners. It was a red day for data center stocks. It was a green day for one sector, which we will talk about later. So no spoilers. We'll talk about that later. The Fed met this week. We got some interest rate stuff to talk about. And are we in a epic.com level bubble? We're going to talk about that today as well. There's a bunch of press releases came out. What's on your mind, George?
History doesn't warn people until it's too late. Right now, while most people are distracted, artificial intelligence is replacing industry. Bitcoin is reshaping money, and a new digital economy is quietly growing in the backgrounds.
Love it. Love it.
I'm George. I'm a business owner. I'm an investor, and I'm a builder. And I'm here to separate the hype from reality because people screaming the loudest online usually know the least. So that fits right in for me. We're talking Bitcoin, AI, crypto, mining, money, scams, and any opportunities that are out there for us people. Mic drop. Take it to you, Tom.
All right, we gotta talk about the red day today. We've had a nice run, and we're gonna contrast today to the fact that just yesterday, the S&P 500, the NASDAQ, the Russell 2000 all reached all-time highs. So sometimes on days like today, we really got to just take a deep breath, calm down, and look at what's going on. Because I will tell you, there were some stocks that pulled back fairly dramatically, but they still weren't buys for me. So I'll tell you what I mean by that in a minute. So be careful selling the dip too soon. Be careful buying the dip too soon. You really got to know your stock. You got to have your plan. You got to have price targets, because if you're just winging it on days like today, you know, you could get out of control on days like today. And, you know, if you're a day trader, obviously fantastic. Then, you know, you love these kinds of days and go nuts. But if you're a long-term swing trader or a long-term, you know, hold, buy and hold, dollar cost average type, these days can feel bad. But a lot of my stocks, I will tell you, my worst three stocks I looked at, and they had very bad days. And it's like, okay, I always ask myself this: how far did I just set myself back? Today is Friday. For two of the three stocks, they got set back all the way to Wednesday, which was 2 days ago. So if Thursday and Friday never happened, I'd still be right where I started. So that's how I try to look at it, right? Just because your stock's down 10% today, if it was up 10% yesterday and 8% the day before, don't be surprised. Also, if the daily RSI is at 80 and it's been there for days or weeks, I mean, the technical, almost everything is on the one-day daily RSI. We are just overheated across the board right now. And that doesn't mean everything's about to crash, because RSIs can reset with some sideways activity. So we're going to talk about where we all think this is going. I'm going to give you my opinion where I think the market is going, where cryptocurrency is going, and where AI is going. So this is, like I said, we got a jam-packed show today.
Tom? Because 10 years from now, people won't ask what happened. They're asked, why didn't I see this coming? Back to you, Tom.
It's, you know what? It's happening at hyper speed. 10 years, that's true. 10 years from now, that's true. 3 months from now, it's going to be true. There's the last 5 weeks is one of the most historic run-ups in the history of the stock market. So putting that in perspective against the backdrop of bad inflation numbers, wars going on, geopolitical tension, everything's too expensive. Nobody can afford gas or groceries, or consumer sentiments at near an all-time low. With all of that, the stock market is on. It was I had a couple of different of the large language models try to search to find a 5-week period that was better than this. And it found 2 that compared. So this really, the last 5 weeks, as far as I can tell, are in the top 3 biggest runs in the NASDAQ in the history of the stock market. So this has been, so if we get a little pullback, and guess what? A spoiler alert for our discussion later, I do not think it's over. I think this is a little pullback. I don't think it's over. And that doesn't mean there's not going to be a pullback in the middle. So, you know, you always got to be careful. Every bull market has pullbacks, but we are off to the races right now in a way that's historic. So we had a bad day. Surprise, you know. Dan, thank you very much for the super chat. Dan said MicroStrategy to 400 with a Bitcoin rally. So I think that's totally reasonable. I'm very fortunate. I got into MicroStrategy, or now as they refer to themselves as Strategy. I sold them at 350 a long time ago. I bought them back at 110 not very long ago, just a few months ago. And you know, I'm up like 80% right now on that already. And Bitcoin really hasn't started to run. I mean, we keep running into a brick wall. We'll talk about it. Somewhere around 82 is some pretty serious short-term resistance. So we'll see what happens. But yeah.
Let me tell everybody, I got out of Bitcoin. Well, 1, I needed some money. But 2, I just feel like something's coming, guys. I feel like there's something bad's a brewing.
George got bad feeling.
I just do. I just don't know why I do.
Short term, midterm, long term.
Yeah, no, short term. Everything I'm doing short term. I got my lockup long term, but my short term, you know, it just was bothering me. So I got out. I'm gonna regroup here for a second. But if we get anywhere below 75, I think that's where I go back in.
So what George just articulated was the 2 things that I would take out of that statement, just in general. Number 1, he wasn't comfortable with his positions. If you're not comfortable with your positions, if you're putting your head on your pillow at night and you're worrying about your stock portfolio, then you've invested. You got to change what you're doing, right? This is, you know, not financial advice, but it's just life advice.
Well, and you hit a really good point there, Tom. Mine was more because I needed money. And so I had to crank the what is it called? The piggy jar open. I had to take a hammer and break it open. I didn't want to touch it, but it's like, dude, I got to live.
Yeah. Yeah. I mean, if you needed the money, you needed the money.
Yeah.
And, you know, George owns several different businesses, so his cash flow is not necessarily resemble yours or mine. But that's the thing. Everybody's different. Right. You got to do what you're comfortable with. But
this is how much I believe in the economy. I'm pulling a house out of the ground next week. I'm not changing my thesis. I said the first 6 months was going to suck. Was I wrong?
Yeah, not so far. In December, George went into this year saying the first 6 months, I got to interrupt myself. Do us a favor.
Oh, yeah.
Please smash the like button. Hit the thumbs up button. It is free. The more that you guys do that, the more this stream gets distributed and we can share with people and have a real conversation and get a meaningful amount of people here to talk about what's going on. So special welcome and thanks to all of our members. We have a lot of long-term members, so you guys are much appreciated. And thanks to all the subscribers. And if you enjoy this stuff, please press subscribe as well. That's at your option. But if you could do us a huge favor and smash the like button. Okay.
All right, go on.
Back to
I think that after, it might be a little earlier. We might get, the engines revved up if we can just drop the interest rate. I mean, I think now we should do a countdown or start counting the days until we see an interest rate drop, because that right now is the most important thing for the United States, period, bar none, no questions.
Okay, in light of that statement, let's talk about that, and I'm going to put up a poll.
Because I think right now our economy is on life support. It's very nerve-wracking to see the markets going as nuts as they always do, because you just don't know when the other shoe's going to drop. But everybody was prepared for the first 6 months to be this way. So the second 6 months should be crazy town. But I mean, whoever thought a war was going to happen, Tom, you know?
Everybody on our channel was prepared, but that don't mean everybody was prepared.
Great things are coming. It's just, are we going to use ethanol gas, or are we going to use pure, gasoline, because sometimes it's hard to start with that ethanol ETH in there.
I'm going to talk about a different kind of ETH today as well, because we're going to talk some crypto. You're
going to dump all in one swoop. And right now, I think it's like personally, if it was me, I would dump it, because everybody thinks it's going to go nuts. I would do a nice little flush out.
Dump.
And then go parabolic.
I'm going to put up a poll, and then we'll talk about this for a few minutes. Interest rates at December 31st, 2026. I think like December 9th maybe is the last Fed meeting, so that'll be the last opportunity. Are they going to stay unchanged? Right. Are they going to go down? Are we going to get rate cuts? Or are we going to get rate hikes? And I'm going to talk about what the market is now expecting. And then I'm going to tell you what I think. And I think probably a lot of people are going to disagree with me. But I think what I think, Sour Melon Gaming, I'm 98% sure there will be 0 rate cuts this year. Okay, I'll discuss that later. I have a different opinion, as I know Sour Melon Gaming knows that. I'm surprised at the results of this poll so far. It does not reflect what the market thinks. But that's okay. Vote what you think. It doesn't matter what the market thinks. We'll take a look at that, though.
I was at least happy that I didn't see anybody doing rate hikes. So then somebody did a rate hike.
Well, that somebody agrees with the conventional wisdom. Because right now, that's
all conventional wisdom needs to be thrown out the window right now, Tom, because the only reason we have inflation isn't because people have money in their pocket. It's because of the cost of oil going up.
I happen to agree. We know oil's at 100. We're going to take a look at that. It's been hovering.
106.
Did it jump up? So
yeah,
it's been all over the place, plus or minus of 100. It's been north of 100 more so than not very recently, but it hasn't spiraled out of control. But definitely that's the gigantic chunk of inflation. Now, there's a few other numbers that went up that we got to do something about. And I'm not going to go line by line through the CPI report. I'm sure you've seen other channels do that. But there were other things. But remember, even those other things get affected by oil. Oil is in every single line. And we got a short-term oil problem. Some of you may think it's a long-term oil problem. So that's a conversation we'll have later. But I want to show you what the market thinks right now, because this is remarkable. And it's the first time this is true in several years. Okay, so this is the Fed Watch tool. So this is what the market is pricing in. I went to the last meeting of the year. See this category right here, 350 to 375? That's where we are right now. 49.9% of the people think we're going to stay there. 0.4 think we're going to get 125 basis point rate cut, and nobody thinks we're going to get any more than that. So effectively, nobody thinks we're going to get a rate cut. 38.9, almost 39%. Think we're going to get 1 rate hike. 9.9, almost 10% think we're going to get 2 25 basis point rate hikes. And then 1%, just under 1%, thinks we're going to get 3 25 basis point rate hikes. This is what the market is. So it is within, a fraction of 50-50. And And rate cuts not even on the table. The market's pricing basically a 50% chance rates stay the same and a 50% chance that rates go up. And some of the market believes they're going to go up dramatically. So I think I'm going to take a snapshot of this, and I promise you we are going to revisit this in 3 months and 6 months, because I'm going to go to Kalshi and take a look. I will bet the farm.
Tom. I call that rubbish.
I'll bet the farm that this is wrong. Yep. Now, I don't have a farm, technically.
Now, I have a question. Tom, could a rate cut cause a problem with the market? Or do you think a rate cut would just make it go more parabolic?
I think the rate cut would help the market. Everybody is terrified about the inflation boogeyman, but I'm going to go through CPI and just remind everybody what's really going on here. And it also depends on your outlook on what you think is going to happen in the next 6 to 9 months. If you think, we're not going to talk politics here. We may touch on it a tad bit, geopolitical stuff, because it does dramatically affect what happens in the market. But I will tell you, there's two different worldviews right now. One is we are in a forever war. This thing's going to drag on. It's going to crush the oil market for months or years. In that case, then you will be looking at no rate cuts and bad things. The other camp is, however this ends, whether we're happy with the end of it, whether we're unsure, maybe what got some good, some bad, or you hate how it ends, it's going to end. And it's going to end before the elections. I think the probability of that is extraordinarily high, if for no other reason than, two gigantic reasons. Number one, being in this war is going to be catastrophic for the midterm elections. So for those of you not in the United States, we have midterm elections, which means the president is not up for election, but the entire House is up and a bunch of the Senate is up for election. And if we're still in knee deep in a war, or this has escalated from here, the Republicans will get wiped out. So they're likely to try and do anything they possibly can to avoid that. The other thing is, the sentiment is overwhelming in the United States. If I did a poll right now, which I will, I would bet you 95% of people, and I really think it's more like 99% of people, want this war to be over either right now or as soon as possible. There is nobody that has an appetite to say, you know what, if it takes 2 years to get this done, I'm okay with that. I don't know anybody that has that perspective. That's not that's not the environment we're in. Trump ran on being the guy that doesn't go into forever wars. There's already a lot of people furious that we're in anything at all, never mind an extended forever war. So at this point, I think he'd rather lose a war than just have a long war. And by the way, we won't talk war, but the saying that we're losing the war is a little bit irrational. Now, saying that you're not quite sure how the heck we get out of it from where we are right now, I get that. That's a very complex situation. So, again, we won't obsess over politics. Opinions vary, and only time will tell.
Pogo, I never seen so many likes get disappeared before when you said hit the like button if you like George, and then it just went down. What in the world? It went down.
What's happened? It's broken.
Yeah. My understanding is rate cuts mean economy is doomed at this time. It's so funny because I'm hearing, Tom, that the top 10% of the wealth is making up 75% of the buying currently of what's going on.
Corporate earning, there's Main Street and there's Wall Street. So you got to remember, from an investment standpoint, one of those things has literally nothing to do with the other. Main Street, meaning me and you and everybody walking around, consumers. A lot of consumers are feeling the pain. I mean, they just are. We had inflation. I'll walk through that in a few minutes. And, you know, inflation doesn't go away. It would take years of deflation to cancel out inflation. So what happens is, even if you get, you know, the Fed has a mandate and they say they have a target rate of 2% inflation. But understand, that doesn't erase any of the inflation that's already happens. That just means everything that's already inflated, we're still going to go up 2% a year from there if we hit our target. Historically, over the last 50 years, inflation's been about 3.5% a year on average. That compounds, and there's just nothing, because what you want to talk about a bad economy, other than, now, commodities can go into inflationary and deflationary periods. So if you look at oil, which is the most important one of all, there's times it's, right now it's very high. If you look at the chart through history, you will see gigantic pullbacks. Like, look at the stock market today versus 15 years ago, and look at oil today versus 15 years ago. Oil could go sideways for 20 years with, up and down variations. The market doesn't do that. It's up and to the right. If you've been just in the S&P 500, you're killing it the last 15 years.
Killing it. He's so true. Tom, we're almost to 50.
Almost to 50 likes. All right. Thank you, everybody.
50, we just got it. 50.
Nice. Much appreciated. Smash the like button. It does help. It makes a difference. We appreciate it. Sourmelon Gaming said Iran's been dumping their excess oil into the ocean. Satellite imagery picked it up. So sad. Right. We don't. Right. Nobody wants. This is what I'm saying. Nobody wants that. Nobody wants this. And that doesn't mean I could tell you how to solve it, right? Nobody wants it.
Tom, might be a good time to buy Dove.
That's right. They're going to pull those old commercials out of storage.
Yeah.
And Alexander said, Tom finally agrees with us. If the war drags on like we think it will be hell for our stocks. So I think it'll be bad for the economy. I'm still not sure what's going to happen with the stock market, because here's the thing. We have a different phenomenon going on. We have the biggest single phenomenon, financially speaking, in the history of the stock market. And, I hate to sound like I'm using hyperbole, but we are in an environment where everything's going at warp speed and things. Let me put it in perspective. Yesterday, NVIDIA market cap reached $5.7 trillion. They are one good week, maybe one good day away from being the first $6 trillion company, which means in the last 3 years, we had the first $3 trillion company, $4 trillion company, $5 trillion company, and now $6 trillion company. You think it's going to stop there? By the way, there's a dozen stocks right behind them, and Google, Google's almost caught up to them. Google's about to pass $5 trillion. The Mag 7, as they call it, and there's 10 or 15 other past that, their profits are skyrocketing. The money is real. The expenditures on and what I'm talking about is AI. AI is here. You might not like it. You might hate it. You might not want to use it. And you might think some companies are going to succeed and some companies are going to fail. But here's the reality. They're going to spend trillions of dollars a year for the next at least 3 years, probably much more. $1 trillion of CapEx each year to build out all this AI infrastructure. It's already happening. In fact, almost every single one of the top 4 companies that dictates this stuff came out at the beginning of the year with CapEx expenditure forecasts that were astronomical. They're all spending more than the numbers that everybody was terrified of, which is why a few of these stocks took a hit, because people just look and say, how can we do this? It's hundreds of billions of dollars every quarter for every company. It's insanity, but it's real. So all the other companies, and by the way, those companies are still minting money, making all-time record profits. So we have extreme profitability. I'm gonna talk about PE ratios because there's a lot of FUD out there, and there's a massive amount of what I'll be generous and just say it's misinformation. And you just got to be careful not to buy into some of these narratives, because remember, all the people telling you these things want your money. All the people you see on TV, so-and-so from Fund X is here today to talk about blah, blah, blah. That person wants your money. So take what they say with a grain of salt. And I'm not telling you to ignore everything everybody says, right? There's some good people out there talking on television. There's some good people out there talking on the internet, but there's a lot of other people and some of them simply, especially, I will tell you this. When you see somebody from a hedge fund, they may be giving you disinformation, but they know what they're talking about. There's a lot of people on YouTube, right? Anybody, here I am. Anybody can open a mic and do this. So there are an awful lot of people, some of which have very big channels that really have very little idea how the economy works, how the stock market works. So
some of them get hired to major corporations that are publicly traded too. Just leave it like that.
Yes, I've heard that said. So I'm just saying, a lot of the stuff you're hearing, and we're going to talk specifically, everyone's saying the market's in a bubble, AI is in a bubble, it's going to burst. We are now, Michael Burry, and I'm just telling you, he knows better. He said it feels like late 1999 in the dot-com bubble right now. So the translation of that is late 1999 is 1 quarter before the NASDAQ crashed 85%, and it took 15 years for the NASDAQ to get back to where it was in the first quarter of 2000. It took until 2000. So if you lost your money in the first quarter of 2000 and you just left it there hoping you'd get your money back, it took 15 years. Now, on the flip side, if you did that, the 10 years after that, you actually made up for it. Everybody that lost all that money and went sideways or down for 15 years, if you held on to Amazon, for instance, or Microsoft or some of the others, Apple, you're actually still rich. But the point is, we are not staring at the cliff of an 85% downturn in the market. That's just not reality. And there's a lot of fundamentals that scream that. They show that that's just not, it's comparing apples to airplanes, not even to oranges. They're just two. This is not the tech bubble. There's not one thing that's happening right now that resembles the tech bubble in any way, shape, or form, other than the market's doing well, which is true every time the market goes up. Yeah, what happened to the NASDAQ is, let's hope that nothing like that ever happens again, because that was catastrophic. And we've had, 3 or 4 different events in the stock market that were just, we had the Great Depression. We had a really bad day in October of 1987, for those of you old enough to remember, which I think on this channel is a bunch of people. We had the dot-com bubble burst. That was the ultimate bubble. That is that's the case study in bubbles. By the way, we had a bubble in 2020. in small cap stocks that crashed big time. It's just, it wasn't a lot of money because they were all small cap stocks, but there's hundreds and hundreds of stocks that were up 1,000%, 2,000%, and those companies are gone now. So that was a bubble. The financial crisis was a bubble. I'm going to go a step further. We're not even in a bubble at all right now. AI isn't even started the part where you talk about it as a bubble. And I'm just talking from the fundamentals of these companies. So that's how different this is than that was. And I'm going to show you the numbers so that you'll see. And you can judge for yourself. And you can research it yourself. And obviously, at the end of the day, everybody's got to make up their own mind of what they believe. I'm just saying, buyer beware when you hear information, especially people like, Michael Burry is very famous from the Big Short, right? He got a call right. He made a lot of money on that. They made a movie about it. He's super famous. Well, he's shorted everything under the sun for the last however many 15 years since then. And he is now saying, he's the one who said this is like late 1999, meaning we are, within months away from the stock market essentially having a historic, disastrous crash. That's what he's saying, because that's what happened. So it's just not true, and I'm going to show you it's not true. I can't tell you what's going to happen in the future. There may be other things that happen that cause a catastrophe in the stock market, but it won't have anything to do with AI. Also,
Coach 56, I've never seen him before. Hey, buddy, how you doing? He said, talking investing, institutions absolutely loaded the ship. First quarter, 50 million shares added to institutions.
In general or on specific stock?
I don't know, because if it's on general, that's really nothing. But if it's in like the Bitcoin miners, that's a ton. There's my wife.
Sarmelon Gaming said, thanks for the extra long stream Tuesday. You are welcome. It was my pleasure. That was a great stream we had with members Tuesday night. Members, if you didn't see it, check it out. And Sourmelon Gaming saying he would sell Cleanspark in chunks. I did sell some stuff. I took some profits earlier in the week because this day, it happened to be Friday. I don't know if this is a one-day thing. I think it's going to be a few days at least. I mean, the market is so overbought. Let's go look at it. Do us a favor and smash the like button. I think we're doing pretty good today, George, after 2 full months of failing. All right. Thank you, everybody. If you've smashed the like button, if you just got here or if you haven't, we would appreciate it. We want to get 100. We used to shoot for 500 likes, but we're I don't know.
Just, those charges were dropped, guys. They never stuck.
Nothing came of that. It's all
nothing came. It was
rumors. Robert is saying, why would you sell something that hasn't been re-rated to buy something that who knows how much is left? So it sounds like he's talking about chasing, selling some of your stuff to chase other stuff. So, you got to be careful. That's right. I will tell you guys what I sold, and it was for various reasons. I'm a buy and hold. I almost never sell stocks. So it's a pretty rare occasion. I dollar cost average in slowly for long periods of time. I all the stocks that I bought in the crypto winter, right? I was buying Bitfarms under 40 cents. I was buying Cleanspark at $1.80. I was buying Riot and Marathon at $3 and change. So, that leaves you in a position where you got some options, because even my Riot position, it's up drastically. I sold some Riot, and you might go, well, You know, don't you feel good about Riot? I'll show you why I sold some Riot. Since March 30th, which was like 6 weeks ago, until Monday, and I sold it on Wednesday down here, it's up 116%. Right? And remember, I was buying it down here. Right? I mean, this hit $3.37. I was buying it down here. 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 So, you know, I bought this stock for years and years and years. And despite the fact that, you know, if you bought recently, you're up 100%. So that is fantastic. But this stock is nowhere near it's nowhere near its all-time high, which was in the high 70s, I think 5 years ago. It got back up to 46 at the peak of the previous bull market. So it just hasn't hit any of those numbers. What it has done is, you can see, it's struggling right now. It's struggling to break out of a pretty long-term line of resistance. This goes back to March of 2022, which was on the way down into crypto winter. So this stock has had a massive recovery. From the bottom, from the cheapest share you could have bought, this stock's up 644%. So I sold some. Now, when I say I sold some, I didn't go crazy. I sold 3 stocks, and it was about 6% of my portfolio. And what that did for me, I did 2 things with that. I reinvested half of it into other things that I've been dying to get into that are beaten down badly. And I left half. Having a little powder on the sideline is nice. You know, we've all been, I know I'm not the only one that's kind of been scraping the barrel to buy the dip because, you know, we joke about it. It's like, go ahead, George.
You see my hand up? I don't have any powder, Tom.
This is who does? We bought 100 dips so far. So, you know, at some point, I'm trimming the position down, and I almost called it a rebalancing of my portfolio because, for instance, you know, I'm going to lump together, and these are not the same, although a lot of companies do both of these. There's Bitcoin mining and Bitcoin related stocks, and then there's AI data center related stocks. Now, a lot of those companies are the same company. So that as a whole, for instance, I'm up 700 or 800% on my IREN. I actually didn't sell any of my IREN. But if I take that group as a whole, it is now a disproportionately large amount of my portfolio because of things like run up in IREN. I happen to think IREN's on an irrational pullback. If my cost basis in it wasn't $6, I would buy it right now. But I'm hesitant to dollar cost average in at $53 when I bought it for $6. So that's okay. I'll just wait it out. And that's why I say I buy slowly the dips and I rarely sell. IREN, to me, it's one of my highest conviction plays right now. I think the market is reacting on purpose. You're being duped. The market is acting ridiculously. IREN just raised $3 billion. We're going to go through those press releases. And what people seem to forget about raising $3 billion, because their stock tanked. It tanked. The part people forget about raising $3 billion is you get $3 billion. I don't understand what's complicated about that. So everybody automatically reprices. Oh, that was and I'll walk you through this and show what happened, because this was a real roller coaster. Try and make these bigger so you can see them. So on May 11th, which was Monday, IREN announced proposed convertible note offering. Monday after hours, they announced their earnings, and the stock was up 18% after hours. It was at like $73 or $74. And then everybody saw this, and that evaporated. By the next day, the stock was down. By the day after that, it was tanking. So here, IREN announces proposed convertible note. This started out as a $2 billion thing they were going to do. That was on Monday. Then on Tuesday, they say IREN prices their upsized $2.6 billion convertible note. Now, you guys got to understand, and I know a lot of you know this, but for those of you who don't, I try to take things from the beginning. When a company announces they're going to do a $2 billion offering, and then they upsize it, what that means is there was so many people interested in this that a couple of things happen in the background. They go, you know what? Okay, we'll raise more. And based on this massive amount of interest in buying this, we're going to make the terms better. Because remember, there was no terms on the Monday announcement. It was going to be senior unsecured convertible notes. Don't know what the interest rate is. And don't know when they're due. Don't know what, the premium is. So now all of a sudden the floodgates open. Everybody wants in. Okay, well, you know what? Let's get $2.6 billion. Then they go, key details of the transaction. $2.6 billion convertible note offering 1% interest. 1%. How's that for a loan? I'll take 1% all day. 32.5% conversion premium. So when these are convertible, which I believe is in 2033, 7 years from now, they can convert them for a 32% premium to where the stock was trading when they were issued. That ends up being like $72 or $73 a share. We'll get back to that. Capped call transactions entered into the connection with the notes, which are expected to generally to provide a hedge upon conversions up to $110. So they're allowing a risk from $73 to $110, and then they've bought capped calls to protect themselves against the rest of the upside. So if this is a $700 stock, right, they're not going to have to sell these shares at $70. They got capped calls. But it doesn't matter because they also have, if I can find the language, if not, I'll just tell you. Give me 30 seconds. Here. The notes will be redeemable in whole or in part, subject to certain limitations, for cash, not stock, for cash at IREN's option on or after June 6th, 2030, and on or before the 30th scheduled trading day immediately before the maturity date, but only if the last reported sale price per share of IREN's ordinary shares exceeds 130% of the conversion price. So if IREN's trading at $120, they don't have to do any dilution. They can just buy this all back. Remember, at IREN's option, the people that hold the note don't have any say in it. They're going to get paid a premium, but they're not going to get, if IREN's trading for $500, These note holders aren't going to say, oh, man, I got this when I was trading for $55 and now I'm going to convert it. I'm going to pay $55 and get a $700 stock. No, that won't happen. The first thing is, if they're in that situation, they will, if they don't have the cash to buy it back, they will very, very easily be able to refinance this amount of money to borrow the money to buy it all back. So I think the most likely case scenario, and again, anything can happen, but it's my opinion because I have a high conviction in IREN, and I think they're going to be one of the winners. Guess who agrees with me? NVIDIA and Microsoft. So I feel pretty good about that. If they are one of the winners, this debt's just going to get repaid. And with it, this is a part of them getting 5 gigawatts. This could be a 30 or 40 or $50 billion top line revenue company in the next 3 or 4 years. To put it in perspective, they were like a $20 million top line company 2 or 3 years ago. So that's what a dramatic change this company is going through. And what does the market do with all this information? They go, tank the stock. We got to sell this. Sell, 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 sell. So they valued, oh, we're not done because here. Then on Thursday, IREN closes $3 billion convertible note with the $2.6 billion. And this is almost always the case. The issuers have the right to buy some amount past that. So it was another 400 million past that. So that brings it up to $3 billion. So yeah, $2.6 billion offering plus fully exercised $400 million greenshoe. So they took that option immediately, as they almost always do. The net proceeds on $3 billion will be $2.96 billion. 1% coupon, 32.5% premium. So again, the market effectively, when you dilute yourself 12% or 13% and your stock goes down 13%, just do this is first grade math. That means you are valuing that $3 billion as $0. That's just math. That's not my opinion. That's just math. And by the way, it happens almost every time. The only time I short-term trade in all the years I've done this, if I see a very good company do stock dilution and they tank, I will buy their stock. And my track record with that, it's not 100%. You know, it's got to be a good company, because some companies are just borrowing money to blow more, throwing good money after bad. But I think IREN's a good company. Yes.
Is Cleanspark a good company?
Well, there's a little bit more of a question mark next to that than there used to be. I will tell you this. I think that Cleanspark is excellent from the standpoint of operations. They said they were going to build themselves out from 5 exahash up to 50 exahash in a short period of time, a couple of years. They came within like a month of that time frame of doing it. So they told us what they were going to do. They did what they said they were going to do. And when they were off by just a little bit, they kept us in the loop and informed us ahead of time that they were going to miss by, a very small margin. So that's excellent execution. Their Bitcoin mining fleet is the second most efficient fleet in the market, second only to IREN, and it's extremely close. By the way, IREN's just going to sell all their machines. They do not plan on mining. By the next halving, IREN will have nothing to do with Bitcoin mining. They're out. Cleanspark is not out. They plan on continuing to mine Bitcoin. They're at 16 joules per terahash. That's second only to IREN's 15 joules per terahash. They run their fleet efficiently. They've been one of the great executors. And there's another company, Bitfarms, which is now Keel. For all their other problems, execution-wise, from an operations standpoint, they've been superb. So several of these companies are great executionally. Bitfarms, now Keel, made some, to call them missteps would be an understatement. They made some catastrophic financial decisions, and they had to claw their way back, and they've done so. So they're on fire. That stock is doing very well. They're a smaller scale company than some of the other ones we're talking about, but their market cap is much smaller. So, and getting bigger by the day, by the way. That is a stock that I will tell everybody that is a member knows this, and a lot of you that have been watching a long time. I told April 1st, they became a U.S. domiciled company. And I said
took me 2 years to get them here.
George has been talking about this for years. So it happened April 1st. And I had said, when they get that deal, they're going to run from $1 to $5. Now, by the time they officially moved here, they were in the high, like $1.87 or something like that. And they were like $1.60 yesterday. They've pulled back, $4.60. They're in spitting distance from $5. And that only happened 6 weeks ago. So that was extremely predictable as I predicted it. Now, that doesn't mean they're going to stay there forever. That doesn't mean they're going to go to the moon. But that piece of the puzzle, I do think there's another giant catalyst for them that has nothing to do with how they conduct business. If they can get to $5, over $5, and stay there for 60 or 90 days, the floodgates of institutional money that will not buy this stock right now. There's a bunch of people that as soon as it became domiciled in the U.S., they went from not being able to buy it to being able to buy it. And once it gets over $5 for a period of time, there's a lot more money, trillions of dollars. Now, they're not all going into this one little company, but all of those funds, according to their own internal rules, these aren't U.S. laws, but in their own internal rules, it's extremely common to forbid the purchase of stocks under $5. Even though that's irrational, they just had to pick some number. That's considered a penny stock, and they don't invest in them. But if IREN can get themselves up to $5, $6, $7 and stay there for a short period of time, I think they'll run to 10 from there. So,
Tom, I have a question.
Yes.
Do you think Heel, I know their name, Heel is going to pass CleanSpark? Do you see how close they are? 2.6 to 3.2. Did you ever think you'd be saying that one?
I think most people remember we've been doing polls on here for years. The majority of people thought they were going to have to do a reverse stock split because their stock was so far under $1. It seemed hopeless that I would ever get back to $1. Now it's on the verge of getting to $5. By the way, it already ran up to $6 once, within the last year. So it's very doable. So I think it'll finish the run to 6. And then we'll see what happens. If it can hold on to those, and then some execution is going to be required. They don't have their deal flow yet. They're behind a lot of their competitors, but man, they did that acquisition that at the time nobody cared about them buying Stronghold. But George and I have been on Stronghold from the beginning.
Yeah.
That place was in the right hands. It's a gold mine.
Oh, before I forget, AREN, congratulations, buddy. His daughter got married.
Oh, very nice.
The world keeps on moving.
So this is what's going on with IREN. IREN's trading for $54. To me, it makes no sense. If we go to IREN's chart, I'll switch over to IREN.
Just so you know, as you guys talk about Rex Finance, I'm not going to pick on that guy, but I can just say there's like you ever see was it like a lab dog following his master? I'm just saying. Not saying there's any correlation there or anything. We're up to 78, Tom.
All right, do us a favor, smash the like button. It is much appreciated and it helps the channel out a lot. We got a lot to talk about, and these stocks these are transformative stocks, I believe. I know, there's a lot of terms that get overused and abused. You're going to make generational money, but these are those stocks. They have been in the past. They have adapted, several of them. So this is why we've always said, everybody's not going to win. There's going to be winners and losers. There's already a bunch of companies. We used to have 17 companies on our chart. We got rid of like 9 of them. A couple of new ones came in, and they were all straight pure play Bitcoin miners. Now, over the last couple of years, they've converted to anywhere from dabbling in AI data centers to now many of them have dropped Bitcoin altogether, and they're just data center energy power plays. HUT is now closing over $100. That's been a question we've had for a long time. Who's going to be the first one to 100? And I am stunned that it is HUT. And I just, if you love HUT, drop a note in the chat. I still don't understand what they do. I watched an interview just a few days ago with their CEO. I don't know what he's talking about. I don't understand what they do. We'll see. Everybody seems to love them. Their stock is on fire, and they're the highest price stock. They are by no means the biggest market cap, but make no mistake, if you bought HUT when they did their merger of equals, you have done very, very, very well. So while I don't seem to get it, the story eludes me. Everybody else is on board, and congratulations if you hung on and stayed through that and got those gains. HUT has done very well. There's several of these companies that have already made people a lot of wealth, and I just don't think a lot of these are even close to done. I think there'll be maybe 3 of these companies that 5 or 6 years from now are going to be, maybe possibly $200 billion market cap companies. And these are all between, $2 and $20 billion market cap companies right now. By the way, 2 years ago, they were all between $10 million and $500 million market cap companies. That's how much they've already. Now, a lot of that's been through dilution, and a lot of it's been through stock increase.
Tom, didn't it get down to under $3 billion for everybody?
It got way less than that. Yeah, it was. Yeah. All of these put together weren't worth $3 billion.
Yeah.
And now almost every single one of them individually is worth more than that. IREN, even after being beaten down stupidly, is a $20 billion company. But it should be. Actually, it should be more, in my opinion. So always remember, these are my opinions and George's opinions. These are not financial advice. We're just 2 guys on the internet giving you our sometimes very strong opinions.
What do opinions and a-holes have in common? Everybody has one.
It is time for a new poll, George. Interest rates at December 31st, 2026. 47% think no change. 35% think a rate cut. So we are a much more optimistic group than the market. The futures are pricing in less than 1% chance of a rate cut between now and the end of the year. And again, I haven't looked, but I'm going to look on Kalshi and Polymarket. And if there's a bet on that, I'm going to be stupid about it. Yep. I'm going to, what are the kids calling that these days? I'm going to degen. Let me know if that's wrong.
You'd say?
Let me know if I use that incorrectly. Somebody out there has got to be.
Degen on it, man. Did you say you're going to T-ball it? What?
Maybe I don't know the lingo, okay? And then in last place at 20%, rate hikes. The market is now pricing in a 50% chance of rate hikes. So I'm going to end this poll. Give me 10 seconds to just type this in.
There's a 98% chance no change in June.
That's what
98% chance.
So see, the people are smarter than the market futures. No, is that no rate cut and no rate hike?
Yeah, neither. Nothing.
Yeah, so then there's no good money there. If it
What
was
do you mean?
50-50 on a rate hike, I wanted to bet the futures are showing 50-50 on a rate hike. I'd go all in on that.
Oh,
Not financial advice. Never go all in on anything.
A 50% decrease is paying 2 cents to $1.
Yeah, it's worthless.
What do you mean it's worthless?
Oh, you're saying 2 cents will get you $1?
Yeah.
Oh, then I'm in. How about a 25 basis point rate cut? How much?
$100 would get you 20 grand.
Boom. I'm
That's
in.
June 17th. How is that even? $100 gets you 19,005 cents.
And the thing about these companies, as I understand them, you're not betting against the house. Somebody's on the other side of that bet.
Right.
And
But
the house.
here's my question. What if they do it before the June meeting?
Well, you win. I'm sure they specify. They usually have a little thing that specifies exactly what they mean by what you're betting on and when you're going to get paid, when it's a push, when you're going to.
How in the world, with Kevin coming in, is it that high? So if you bet $1,000, your return, if you win, is basically $200,000. Isn't that insane?
It's crazy.
$200,000.
I'm in. I'm telling you, I'm going to put a nice amount of money on that.
I almost think there will be one before July, before the 4th of July. I think there will be one.
How about December? Do they have December? By the way, there's a new poll up. Is IREN a buy at the current prices? And you can say yes, and you're actually buying it, or yeah, it's a buy, but I'm not going to buy it, or no, it is not a buy at these numbers.
That's all at 50%. Yeah, I mean 50 basis points. They don't have one at 25% for some reason.
Yeah,
There's gotta be.
because there's too much of a chance of that happening. Although I do think we will not get any change at this next meeting. But then I think it's on. The market likes to abuse the new Fed chair. It's a small sample group, but it's usually the case. And I think to steady the waters, they'll do nothing at this first meeting. But I think that will be Warsh's first chance to speak. Right? It won't be Jerome Powell standing up there ever again. I'll stop for a personal moment of a round of applause. For me personally, like, he might be the greatest person on earth in real life, but I think he was the worst Fed chair we've ever had, and that is saying something because we have had some bad ones. Huh?
Doesn't he get sworn in on Monday, or did he already?
I don't know if it was. I don't know if it's. I mean, he's been confirmed. I'm not sure which day he gets sworn in, but the next meeting is his. he'll be the one talking. And remember, oftentimes what the Fed chair is saying affects the market a lot more. So what the Fed did gets released 2 p.m. Eastern time. And then the Fed chair comes on and talks a half an hour later. If you look historically, the bigger moves are usually when the Fed chair has his talk and question and answer, because that's more of an insight. All you learn at 2 o'clock is what they did. And the reality is
he took over today, Tom.
Okay. This was supposed to be his last.
Chairman.
All right. So we have a new Fed chair. Let's hope he does better than the last one. That's all I can say.
I don't like his last name, because it almost seems like the economy is going to do worse. Worse, wash. I told you, it's in the name.
It's right there.
14 years, by the way.
Brutal.
14 years. So that means 2040, this son of a bitch will still be there.
So Robert Anderson's asking an important question. Won't Jay Powell still have an equal vote? So the way this works, first of all, Jerome Powell's going to stay in the Fed, which is, I don't know if it's unprecedented, but it is not standard operating procedure. It's bad form, let's just say. Usually when you're done being the chair, you move on with your life. He wants to stick around. Now, not every Fed member votes in every vote.
What?
The Fed chair votes in every single vote, but the members rotate in and out of the meetings, and they rotate when they vote. So he won't get to vote as often, and he's not sitting at the head of the table. And I will just give a statistic that, to me, is just very simple statistic. The Fed chair has never been an outlier on the Fed's decision. So the 100% of the time of every meeting that's ever happened, the Fed has done what the Fed chair voted for.
Did you guys see his crypto holdings? $147 million.
Who, Warsh? Walsh? Yep. Warsh? What's his name? What's
W. Warsh. I don't know how to say it. You want me to spell it for you? W-A-R-S-H.
Yeah, Warsh. I pronounce that Warsh. Warsh?
Yeah. What's the economy going to do? It's going to be Warsh.
No, it's going to be better. So this chart does not show after hours, but I'm just going to draw in back to IREN as you guys are voting. Right? After hours does not exist on this chart, but in after hours, this got up to around here. And from there, this stock's down 27% since the moment they announced they were raising $2 billion, which ended up being $3 billion. So they now have $3 billion more than they used to have, but they're down 27.5%. I will let you guys be the judge of whether or not you think that makes sense. Because here's the thing. If you don't think that makes sense, and I think I've been crystal clear that I don't, this happens all the time. And I can tell you a disproportionate amount of times, if I play it through options and I'll go out a month because it can take a day, a week, a month, but usually within a month, this has totally, for good companies. Again, there's bad companies that just raise money, lose it all, raise more, lose it all, raise more, lose it all. Well, then your $3 billion really is worth zero. If all you're going to do with your $3 billion is show a $3 billion net loss next year, Rivian, Lucid Motors, then you really are throwing good money after bad. But that's not what IREN is doing, right? They're scaling up beyond exponentially. So I think they're going to spend the money wisely. I think they're going to get huge revenue. They already have a revenue deal from Microsoft, the company that's had the most time as the largest company in the world for the last 25 years, almost tied with Apple. So they got a deal from the monster of all monsters, Microsoft, and then they got a deal from NVIDIA, which is now currently by far the biggest company by market cap on Earth. So, and is the leader in AI. And not only do they have a revenue deal, but they have a partnership to build out the next 5 gigawatts of power with NVIDIA using their latest and greatest chips. They're going to have one of their sites in Texas be NVIDIA's flagship site for training. I mean, now, if IREN does not perform well, NVIDIA, the way that this is written, NVIDIA reserves the right to tell them, sorry, you guys failed. We're moving on to somebody else. So, you know, they got to do a good job, but they are set up to, if they're at full capacity at 5 gigawatts, this is going to be way north of $100 billion company. It could be north of a $200 billion company, in my opinion. So none of that's guaranteed, and we have no idea how long that's going to take. I'll tell you this, it won't be in 2026. It won't be in 2027. It won't be in 2028. But you know what? If they're adding and adding and adding every year, and they're marching towards that goal the way that they said that they would, then they'll be growing on the top line. They'll be growing even more on the bottom line, and they'll be doing what they said they were going to do. And that is what investors like. So I really think there's good things ahead, which is why up close to 800%, even after this pullback, I did not sell one single share of IREN. I sold other stocks in this portion of my portfolio to get some money to rotate into other industries that are beaten down. A lot of them, and I'll just tell you, software. Every single software company has been decimated. And it doesn't make any sense. There are several software companies that not only will withstand AI, the concept is AI is just going to put them all out of business. They're not good business models anymore. They're going to be obsolete. Their number of users are going to go down because everyone's going to lose their job. So there's going to be nobody there to use them, even if they did want to use them. And plus, you're not going to have to use them anyway because AI is just going to do it all for you. Well, maybe 100 years from now, all that'll be true. But that's not what's happening right now. These companies are minting money. These are companies that have balance sheets that I would call an A, and income statements that I would call an A. If you got an A on your balance sheet, an A on your income statement, and an A on your forward projections, and your stock's down 40 or 50 or 60%, I'm buying it. I don't believe they're not changing their forward projections. So what you're saying is you think the companies are wrong and they're going to miss. But the thing is, companies like here. I had a couple of things I was going to talk about, and neither of them are open right now. This is about beef. So as we were talking about inflation, beef prices have hit record highs. Stat of the day. So it's not just oil. We all know beef has been a problem. There's a few other things. So I won't belabor this, but new all-time high for beef. Something's got to be done about beef. Something's got to be done about oil. Something's got to be done about there's 2 or 3 other things in the CPI report, but mostly in reality, obviously the amount of oil versus the amount of beef, those are not in the same universe. I've been dollar cost averaging into ServiceNow for months. And I literally sold stuff this week to buy more ServiceNow. And on a day where every single thing in my portfolio was red, and every single thing on all my watch lists were red. All the software stocks were green, and not just a little bit. Up 5%. So I sold some of my Riot, which was down today. I bought some ServiceNow. I sold some of my BitDR, which actually is a wash. Since I sold it, it went up huge yesterday and then came all the way back down today. So that's just a wash. But again, these trades are not to be measured in 1 or 2 days, because I plan on holding ServiceNow for a significant amount of time, and I don't even think it's begun to recover. Right? This stock's down 38% year to date off of its lows, right, of 81. So I've been buying this stock, and it hit 81, and then it hit 83. So I've been dollar cost averaging into this stock. My lowest was in the 85 something, and I've been going all the way along up to like 92, but I'm not done. I would still buy it at 95. I didn't buy any today because I just bought some yesterday, but I'm not done dollar cost averaging into ServiceNow. And there are several other, in my opinion, there are several other software stocks that are just beaten down, and they shouldn't be. I think this company's going to have a phenomenal year. Right, I'll tell you one more, that these are some names people know. Right, these are not miscellaneous, random, obscure companies. Salesforce.
Who's Salesforce? I've never heard of them.
Up 3.5% today on a terrible day. Look at their PE ratio. Their trailing PE ratio is 22. This is a tech stock. So this is priced down 35% year to date. And that's off of its lows of 163, it looks like. Oh, did it get even lower than that? 164, 163, 164. So again, I've been dollar cost averaging into this for 3 months, and it's still in a big time buy zone for me. So, you guys got to decide whether it's something you want at all. But I think that these, and when you go out there, I'm just going to warn you what you may already know. Every video you watch is going to go, these companies are garbage. Here's why they're going out of business. AI is taking these over. The sky is falling, various other things of that nature. So if you believe that, then, don't buy it, I guess is all I would say.
I believe that. It's just not the time period that matters.
Right. What's right? It's not, is that going to happen someday over the rainbow? That's not what the market prices in.
No, you're hitting the nail on the head. I think, I think in 10 years we have to really, consider this company as you better be out by then.
Right. And here's the thing. For me personally, I don't have, other than maybe 5 stocks in the entire stock market, I don't think there's such a thing as a 10-year investment plan. There's a 5-year investment plan. But by 10 years, the technology, the market, the world is so different. You can't have a plan for 10 years from now. You can have a general plan on what you'd like to do. Hey, I'm going to be moving into more fixed income stuff over time. Yeah, that kind of financial planning you can do, but you can't say, hey, I think Salesforce is really looking good in the year 2036. I think that's going to be one of their really good years. That's just an unreasonable statement. Don't forget.
Hang on, sorry, notes of Waterloo. She got married in Waterloo. That's insane. That's really insane. And then Tom, someone took your advice and just bought IREN.
Oh, nice. Well, good luck.
Good luck. Best wishes. Sucker.
It
We
was-
can sell them now.
Those were my shares. I just sold in after hours. No, obviously, I'm only kidding. Now, it's not going to be my fault because, again, this is what I'm doing. This is what I think. But for those of you who have watched this channel, my absolute number one rule in investing is I like to phrase it as you cannot borrow somebody else's conviction.
No.
If you do, when things go bad and there's a bump in the road, you are going to buy high and sell low.
91 time.
I've been saying, all right, I've been saying that for the last 5 years. I've probably said that 1,000 times, but I will tell you, I don't care who you are watching and how smart they may be and how great their track record may be.
Once you do it.
When you do it and it's not your own conviction, and then all of a sudden, boom. I'll give a great example. IREN, the one we're talking about. Boom, IREN tanks. You know how many people panic sold? They panic sold a stock that's getting $3 billion at 1% interest. And that $3 billion is quite literally, I walked you guys through the math. It's being priced as $0. So to me, that's how I look at it. But that's my conviction. If you don't know it and believe it, you're gonna sell at the wrong time, and it ends painfully. So just and it doesn't mean you have to be the world's leading expert on the company. Spend an hour. In 1 hour, you can learn everything you need to know, and then update that. Spend 15 minutes from time to time, and you'll be up to speed. And that's a reasonable amount. Do I spend 20 times that? Yes, but this is my hobby, and that's not what people normally do. And it's not necessary. So, and I have 150 stocks on my watch list. So, I read financial statements for fun. That's not standard procedure.
So, I bought. We were dollar cost averaging on CleanSpark. It's $6.15, right?
Yes.
We were up as much, almost 300%, and now we're only 112%. And I'm worried that's going to erode away.
It's not an irrational worry. That could go in either direction. I do think that CleanSpark is undervalued, but I will say this. Their conference call was a swing and a miss.
Oh, my goodness. Yes.
Period. So they needed to say, here's the problem that I have with them, and I know a lot of people have this. Matt has been talking about we're in late stage discussions with hyperscalers. We're in secret midnight double secret probation super.
Can't talk about it.
Right. We're so deep into the conversation we can't even discuss it. When you set the expectations like that, what you're saying is a deal is imminent. Right? Translation, whether that's what you mean or not, this is what the market hears. A deal is imminent. Wow. I can't wait for that press release. And then silence. Silence. Well, you know what? They're waiting. They're doing earnings in 10 days. They're waiting to announce it at earnings. Anticipation. They go to earnings and they go, we are talking to hyperscalers. We are making progress on a deal. A deal is coming. Those words now, they're not even neutral anymore. They actually make people want to sell the stock, which is what's happening.
And Ron, we had a really long conversation about it in the members stream. And Tom went, what'd you go, like an hour over on the members stream?
I did.
Yeah. And what was that about?
Well, we had, you know what? Most of these streams, I have another 1 or 2 hours worth of stuff prepared because there's just been so much going on in the market. and had a lot of people were sticking around, and I thought we were having a fantastic conversation. So I went for an extra hour, and I thought it was a great conversation. So I hope you guys enjoyed it as well.
I have a life, so or is that a wife? Sorry, no, that's a wife.
That's right.
Not a life, a wife. So that's why my time was limited.
Ups, and I see somebody saying they're upside down on CleanSpark majorly, and they're not alone. They're not alone. I mean, I'm still wildly up on CleanSpark.
What's the short report on CleanSpark right now? It was getting above 10%, or it was getting.
It's way. The short interest is way above that.
Okay. They don't lose, Tom. They don't lose.
The shorts? Yeah, but they end. The only way you can win as a short is to play out your trade and be done with it.
And my SMCI, is that what it is? SMCI? I'm up almost 40% on that.
Nice. See, that's one we called out on the channel less than a month ago. 3 weeks ago? What was it? Could have been a month ago.
Yeah.
I don't even want to say this, but the market's been giving a lot of easier opportunities. So we've been able to make a lot of calls on this channel, and it's really, they're not rocket science. The market's been providing opportunities. If you can look through the massive amount of disinformation and FUD and just use your brain and go, what's reasonable? What's realistic here? And apply those standards. I think it's not always, sometimes it's like this. And then you know what? Sometimes for 6 months or a year, it's very hard to stock pick. I feel very good about the companies that I'm moving into right now. Some of them have run too fast, right? I started dollar cost. I was very late on Micron. I started buying in the 300s, and I think within 5 days, it was in the 700s. So, I'm not dollar cost averaging in up 125% in 5 days. If I get a big pullback on that, if that pulls back, it's already pulled back like $80. If it pulls back another $100, I'll buy a little more. But it's important. You can't just FOMO chase. And the reason that I will buy more is even now with this ridiculous move to the upside, they're at an 8 forward PE. People don't understand what that company's doing. So, in my opinion, I would I would put that on your watch list and take a look at it and see what you think about it, because there's only 3 companies in the world that do what they do. We can't do AI without it, and they're not going to. AI spending isn't going anywhere for the next 3 to 5 years. We may find out 5 years from now we overbuilt and there's all of a sudden it swings the other way. So in that regard, at some point in the future, but between now and then, these stocks are going to run. Right? I mean, we know these guys have already talked about their 2026 CapEx spending, their 2027 CapEx spending. I'm talking about the Microsofts, the Metas, the Googles, the Amazons of the world. They're not going to slow down. It's a race. The race is on right now, and they are trying to grab market share. So George CleanSpark, according to MarketBeat, the short percent of the float for CleanSpark is a staggering 36%. That is, for a stock of this size, that is absolutely staggering. So that's a catalyst in the right direction at some point. And if you go to the chart, right, so if people were putting shorts on back here, this was October of 2025. And this is nowhere in the neighborhood of their all-time high. This is just where they were in October of 2025. From there until they kind of double bottom down 65%, and then all the way at March 31st, down 65%. So here's the thing. All the people that put those short positions on, since then, you know, right now the stock's up 61%. It was up as much as 83%. I think the next move in a very short time frame. We just had a bearish crossover on the MACD. We are resetting the daily RSI. You can see 50 held last time as support. That could happen again. So I think there's a little more downturn to here. I doubt we'll retest $10. I seriously doubt that. If I'm wrong, I'm wrong. And then I think the next move is going to go up to test this. That's what I think. For as much as people, especially if they actually do put out a press release that says they have a deal of any kind. And in the meantime, particularly if Bitcoin has a breakout, remember, these guys have 50 exahash of Bitcoin mining. They also have, 13,000? I got to double check the number. They have $1 billion of Bitcoin on their balance sheet. So if Bitcoin goes up 20%, they make $200 million for doing nothing. So there are catalysts out there. George, that short percent, and this...
Right.
This, according to Market Beat, so take that for whatever it's worth, 36%. That's ludicrous.
What is it?
Here, watch Marathon.
Let's see if anybody gets my joke.
Marathon, 26.5%. Other than micro cap and nano cap companies, right? These are multi-billion-dollar companies. They're still, in my opinion, small cap, but they're not nano cap. They're not micro cap. These are decent-sized companies. These companies like this don't have 26%, 36%. That's going to put them in the top 10 or 20 shorted stocks in the whole entire stock market above a market cap of $2 billion. Right? That's how short these companies are right now. They are heavily, heavily shorted. Think we need people to smash the like button, George.
We're almost there, Tom. 94. Hang on. Drum roll, please. Still 94.
That was anticlimactic drum roll. All right, so let's just quickly go through this. I just want to talk CPI for a minute to wrap up our inflation conversation. You can see this is the 5-year chart. CPI was 3.8. That is much higher. We were down to 2.4 in January, 2.4 in February. We popped up to 3.3 and now 3.8. But the thing is, we were anticipating 3.7. So it was a miss, but it was a very small miss. The market reacted in the morning, and by the end of the day, it kind of brushed this off as already priced in. And I want to put it in perspective, because the one thing the market has done is they've said, wow, we need to raise rates. So I want to be just crystal clear as to why I think Jerome Powell did a bad job.
98? Sorry, go on.
Back in April of 2021, CPI was 4.2. We didn't even talk about it. There was no discussion at the meeting of raising rates. It wasn't even a topic of conversation. Then it popped up to 5%. That's when our favorite word got invented. Inflation is transitory. Don't worry, everybody. Inflation is transitory. There's no need to raise rates. We're not considering raising rates. And by the way, rates were at an all-time historic low, near zero at this time. So they didn't even want to raise the rates from zero at 5% CPI. Now, everybody's panicking that we absolutely have to raise the rates at 3.8% CPI. But what did our friend Mr. Powell do then? Went up to 5.4, transitory. 5.4 again, transitory. 5.3, oh, it's getting better, transitory. See, I told you. 5.4, transitory. 6.2, CPI of 6.2. I'm going to go to the 10-year.
Transitory.
Look at these numbers. We hadn't seen anything like this. In these 5 years, we never even saw a number half that. Transitory, not doing anything. Still didn't raise rates from almost zero. 6.8%, nothing. 7%, transitory. 7.5%, transitory. 7.9%, don't worry about it. No rate hikes. 8.5%, no rate hikes. Now we should raise rates at 3.8% when 8.5% was inflation is transitory. Finally, I believe it was in June of 2022 when inflation went over 9%, the worst in 50 years. Finally, they lowered interest rates. They raised interest rates. So, to me, this was one of the most historic misjudgments the Fed has ever made. But then, I would have kept rates up. I get keeping rates up for all of this, right? Because even down from 9% to 6%, that's great. Raising rates is helping. Let's keep doing what we're doing because 6% is not the target. 2% is the target. 3.5% is the 50-year average. So we're not where we need to be. Don't do anything. Don't do 5%, 5%, 4%, 3%. We've been in the 3 to 3.8% for 2 years. And we're talking about raising rates. So in my opinion, every single month for the last more than 4 years, the Fed has done a bad job. That's 10 meetings. That's 40 meetings. I don't know what these guys are doing. I wish we could take 10 people off the street with common sense and put them in that room and have them decide what to do, because I guarantee you they can't do worse than these guys did. Again, maybe they're the 10 nicest people on the face of the earth. I have no idea. I don't know them. I know objectively they were bad at their job.
Joseph, I got a good comment for you when
I've ranted more than enough.
Well, looking back, why did inflation set in so bad? Is it because of just spending from the federal government?
There were multiple reasons. It was the perfect storm. To think inflation was transitory at that point was mind-boggling. Interest rates were at zero. We were printing money, M2 money. On top of printing money, we were sending people checks in the mail multiple times. Right? I mean, and then the global supply chain for several years was drastically interrupted by that thing that happened in March of 2020 that YouTube doesn't let me say the name of. So
Tom might be leaving YouTube before then, Sour. Sorry, go on. Sorry, I don't want to spill everything we got going on. We got a lot going on, guys.
We did not know. I made a day that said if we get 100 likes, then I will I will. My deal was going to be.
We didn't get them though.
No, that was like we went 15 of these streams in a row. I think at least 10 in a row, somewhere between 10 and 15, where we didn't get 100 likes.
104.
Thank you, everybody. It's much appreciated. All right, smash the like button. We are over 100 likes.
So, as before I forget, Joseph. So Tom and I were talking here probably like 3 or 4 months ago when it was, I think it was around February, right? When it tanked the market.
Yeah.
And when we were so we were
February 5th was the washout.
And this was an interesting conversation, and it's kind of glad I get to share it. We were talking, and I'm like, because I just took a haircut on a lot of stuff. I didn't sell anything, but I took a haircut on a lot of stuff. And Tom's telling me what he bought, and I'm like, "But how's your portfolio?" He goes, "Oh, it's down, from your highs." He goes, "But I have more stuff," and I'm like, "What do you mean by that?" He goes, "I have more shares, so it doesn't bother me that the price is down because I have a lot more shares. That's how I know I'm going to be successful, is because I have a lot more shares." So I just thought that was an interesting statement, by the way.
That's how I try to look at it. And unless, obviously, if you have a company and the narrative has changed, their performance has changed, and the industry has changed, whatever the case may be, if there's a catalyst, but if a company's doing well and the stock's doing poorly, as frustrating as that is, and I get it, I just went through my $9.36 bit farms going down to 37 cents. So I've been there with most of you guys. But you know what I did at 37 cents? I have 10 times as many shares of bit farms now, Keel, as I did back when it was $9, right? I've 10x'd the number of shares that I have. And now Bitfarms is from 37 cents. They're now at what? Where'd they close today? Well, they are now called Keel, first of all. They're at $4.39, up over 10x, way over 10x from where I was buying at the. So I have 10 times as many shares, and it's 10x'd. Now, they're not all at 37 cents, right? That was the absolute bottom, but I was buying them at 45 cents. I was buying them at 60 cents, et cetera, et cetera. So if the best thing you can find, if you have patience, and I will tell you guys something, this is a newer phenomenon, and I'm seeing it more and more and more. There's that old saying, the market can be irrational for longer than you can stay liquid. There's a new phenomenon. When certain stocks, when they get beat down, the market intentionally keeps them down and shorts them for 3 years. 2.5 to 3 years seems to be the number that flushes basically 95+% of retail investors out of a stock. The company could be having A+ balance sheets, A+ income statements, A+ forward guidance, and 95% of retail investors will be gone somewhere between 2.5 and 3 years. So when I say sometimes you got to wait for it, sometimes you got to wait for it, which is why I buy when they're low. And I know, okay, I'm probably going to sell this 2 years from now, 3 years from now, and it's going to be a roller coaster ride along the way. And the longer it's down, the more I can dollar cost average in. I only have maybe 3 stocks in my portfolio that are red. And it's not because I'm a great stock picker. It's just I'm an average, at least average stock picker, and I'm patient. That's it.
You're average?
I'm just saying,
a little bit above average.
Wherever I am, I know I'm at least average. If I'm better than that, great. And you're welcome, Joseph. Thank you for joining us. Let's see, what did I miss? I do want to talk about one other thing. Maybe more than one, but at least one other thing. Gotta find it.
I gotta run, guys. Merry Christmas.
George, you're out. All right. Merry Christmas. Very early Merry Christmas to you. Give me 10 more seconds. If I don't find it, I'll just tell you. Okay. The 30-year Treasury bonds, I cannot find this article. And I just found it. The 30-year Treasury yield just broke its highest level in almost 20 years. So, as I've been waiting for rate cuts for the last year and a half, the market has given up on rate cuts, and now they're pricing in rate hikes. And with that, the 10-year, the 20-year, the 30-year are all going up, 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 up. This happens to be about the 30-year treasuries. Highest level in 20 years. I will show you something that I've been dollar cost averaging into. And I'm still in early stages. I would like to quadruple my position in this, to put it in perspective. There's ticker TMF. This is a 3x leverage. So the first thing I will say is watch out. 3x leverages, 2x leverages can run away from you and do bad things. If you're wrong and it goes the other way, these move quickly. For the very reason they're good when you're right, they're just as bad when you're wrong. So understand, know what you're getting into if you even consider this. But this is directional daily 20 plus year treasury. It's down 14% year to date. It's down 85% in the last 5 years. That's the 5 years the Fed, in my opinion, has been bungling things. And by the way, it's at its all-time low. All time. Right now. Today. Is it going to go lower? I actually hope it does, because like I said, I'd like to double or triple or quadruple this position. But I go patiently, so I'm buying this one piece at a time. I'll get as far as I get. But, if you think that rates are going to stay high forever, then don't buy this. But if you think, the rates are at a 20-year high right now. I can't figure out any sense in that. So I think rates are going to come down. Again, I have a longer horizon. I think this is going to happen in the next year, but if it takes 2 years or 3 years, when this goes, right, this is trading at $32. This was trading at, what did it peak at? $464. But actually, if I go, I think it was actually higher than that. No, I guess it was 400. So that's a 20x from here. I do not believe this is going to 20x. But I think a 5x on this in the next couple of years is easy. It doesn't mean it's going to happen, but I think that's extremely doable. Unless things don't play out the way I expect. If I'm wrong about what the future holds, then my investment thesis is going to be wrong, and my stock picks are going to do poorly. So, we don't know the future. And Doug said, I'm up in CleanSpark, but I bought early. Right, so you're in the same good spot I am. I'm holding. I sold some of my Riot. And again, I maintain most of the position, but I sold some of my Riot. I sold some of my BitDR. And I sold some of my Marathon. So I trimmed 3 positions. And again, for those of you who weren't here, it was more in an effort to rebalance my portfolio. Because even though, you know, like Doug was just saying, I'm massively up on CleanSpark. I know it's doing poorly, and I'm not saying that to brag. I don't like where it's at. I think that CleanSpark is doing poorly. That's just true. Their stock is doing poorly. They need a deal. To me, their communications are not doing well. The optics of their salaries are not great. So they need to do some stuff. But having said that, I think they're going to do that stuff. And I'm in a position where I'm up a lot and CleanSpark's down a lot. So I don't want to sell that one. Riot, I'm up stupidly on Riot. So I was able to take some profits on Riot. BitDR and Marathon, I'm losing my conviction in those 2 stocks. No, I did not sell the whole position on either one of them by any means. I sold a chunk, enough to free up some money to rotate out of this into some stocks that have crashed that I think are great companies. So I'm shifting, I'm diversifying, and I'm taking profits where I see fit. And I've been a little late on that at times in the past. SLMT. This is a question for, if you're wondering where I got this, it was not out of left field. This was a comment from Ethan, longtime member. Thank you, Ethan. I don't know this company. This is a 47. Let me know if I'm on the right company, Ethan. SLMT. Looks like the right company. This is a $47 million market cap. So I don't know anything about this company. I'm going to write it down. And maybe we can talk about it on the members only stream and see what we think about this thing. But these are the one thing I'll say about these. I remember when a lot of the companies we're talking about were this size. So there can be big opportunities. I don't know anything about this company, so I'm not going to comment on it. I see Solana right here in this article. So is this a Solana treasury company? Looks like it. I don't know. We'll find out. In any event, thanks for the putting this on our radar, and I will look into it. And Ethan is saying, yes, it's a Solana treasury company. I will tell you, I'm playing Solana through the ETF. So I am building a position in Solana. I have a high level of confidence in Solana. I'm also playing Ethereum indirectly through shares of Bitmine, which is Tom Lee's company. They are very close to their goal. This is a fairly new company. They came out and said, our goal is to own 5% of all Ethereum everywhere. Well, they're almost there. I think that is a company that is going to outperform the underlying asset. So that's my Ethereum play. I'm building that out. I'm building out the ETF on Solana. So I got some stuff going on. Those are smaller positions, but again, that's why I'm trying to take some profits, a little bit of profits on some of my lower conviction Bitcoin / AI hyperscaler data center plays, because I have lost some conviction on some of those, and there are many, many opportunities in the market. So, drop in the comments if you guys have some good opportunities that you know about that you want to share. The stock market hasn't been, I said I was going to talk about this, so I'm going to talk about it. The stock market hasn't been this expensive since the dot-com crash. Find something else real quick. Bitcoin briefly hits 82,000 as Michael Burry warns of stock crash. The big short investor warned the NASDAQ 100 has reached dot-com bubble territory. Dot-com bubble territory. And he's calling for a stock market crash. That's Exhibit A. Exhibit B. The stock market hasn't been this expensive since the dot-com crash. The closely watched Shiller PE, which is price to earnings ratio, is now less than 5% away from eclipsing the level reached during the dot-com bubble. So it sounds like the market's approaching dot-com bubble territory. The Shiller PE ratio says so, which would give the stock market its most expensive valuation in history. Exhibit B. As to why you should not believe everything you read, and statistics and numbers can lie. The Shiller PE measures the price to earnings of a broad array of stocks representing virtually the entire stock market. Okay, so let me find the, go right past it. Okay, the Shiller PE ratio is popular because it smooths out short-term earnings volatility and business cycle swings by using a 10-year inflation-adjusted average. In turn, this gives investors a clearer long-term view of whether the market is truly expensive or cheap compared to traditional single-year PE ratios. Right? So it's a broader, more flattened out indicator, and it's heating up. It's heating up so much that it's almost where it was in the dot-com bubble. Here's the problem with that. It's comparing apples and oranges again. So whether was their intention, I'm not giving intent to whoever wrote this. But what they've effectively done is misled everybody drastically. And I will show you why. I asked Google, Shiller PE ratio for the dot-com bubble, NASDAQ only. At the peak of the dot-com bubble, early in 2000s, the NASDAQ composite reached a staggering trailing PE of roughly 200. So the dot-com bubble was 100% NASDAQ stocks. The NASDAQ crashed 85%. It took 15 years for the NASDAQ to get back to where it was in March of 2000. It was late 2015. But this was at a PE of 200. And by the way, that's even misleading because most of the companies weren't making any money. A significant number of the companies didn't even have any revenue. So, while the dot-com was over a 200 PE, the Shiller PE at that time was 44. One of those things has nothing to do with the other, right? The S&P 500 was doing its thing. The S&P 500 didn't crash 85%. The S&P 500 didn't take 15 years to get back to where it was. So you're judging two totally different things. The dot-com bubble was just that. It was the, I don't know. I doubt right now, if you look at the NASDAQ 100 and the S&P 500, you're going to see a massive amount of crossover. A lot of those stocks are the same stocks. In 2000, very few of those stocks were the same stocks. Apple, Microsoft, the companies that had been around for a long time were in both of those. The rest of what was going on the NASDAQ were things like, let's say, pets.com, if anybody remembers that. They had a Super Bowl commercial in the year 2000, right? In the year 2000, virtually every commercial during the Super Bowl was a .com commercial. One of the commercials, this is how blatant it was. One of the commercials was from an investment company, and it was a bunch of guys around a water cooler, and one of the guys was like, "Hey, my tech company had profits this quarter." And all the other guys were like, "Oh my, I'm so sorry. I'm so sorry for you. I'm so sorry to hear that." Because the joke was like, those aren't the companies going to the moon. It's the ones losing money hands over fist. It's the ones that don't even have any revenue yet that are skyrocketing and mooning. So it was laughable, the thought, well, my .com company is making money. So when you see articles, now if you look at this statistic, that the Shiller PE is 5% away from eclipsing where it was at the .com bubble, I would tell you, what's that got to do with anything? Nothing. That's my opinion. Let me know if you guys think I'm making sense about this. Is IREN a buy right now? 72% of you say yes. 40% of you say not only is it a buy, but you're buying it. 27% say no, it is not a buy right now. That is the end of that poll. Thanks for participating. And it's not too late. It's never too late to smash the like button if you just got here, or if you would be so kind. So I just like to show this kind of stuff because these are two articles. I've seen over 100. We are in .com territory. This reminds me of the .com. This reminds me of the winter of 1999. I can't tell you how many times. It's like one person said it somewhere, now everybody else has to say it. This does not remind me of the fourth quarter of 1999. This does not remind me of the stock of the .com bubble. The forward PE of the NASDAQ is like 24 right now. Not 200. 24. And it depends who's measuring it. I've heard it as high as 25 or 26, but it's somewhere in the mid-20s, not 200. This is nothing like the .com bubble. Every one of these companies, here, I'll give you this stat. Micron, which I've been investing in, and again, I was late to the party, so my position isn't as big as I would like it to be. If it pulls back, I will buy more. Micron is going to make, they're forecasting net income of over $100 billion next year. That's more revenue than all the .com companies had put together in the year 2000. And that's revenue versus net income. All those .com companies put together had no income in 2000. Just Micron's going to make over $100 billion. It's got a forward PE of 8. Does that sound like .com era? Right? We just looked. And you'll get some sites to say it was over 100 Some sites will commit to this 200 PE. Also, a lot of sites will tell you it's really hard to compare because most of these companies were losing money. So you can't have a price earnings ratio when you're losing money. So that's even worse. So again, if you're looking, you're going to see this relentlessly. You're going to see article after article after article. You're going to see a guy like Michael Burry. He knows better than this. This does not remind him of the dot-com bubble. No, it doesn't. He manages billions of dollars. I refuse to believe that this reminds him of the dot-com bubble. I believe he said that. I don't know. Maybe he's actually convinced himself that that's true. Here, look at if ever you were going to argue a company was overvalued, it would be the one that all of a sudden is the biggest company in the world and got beat up today all the way down to a $5.5 trillion market cap or a 45 trailing PE, not 200, 45, and that's trailing. And by the way, if you go look, first of all, here's the last 4 quarters. Just to put this is important because I'm going to talk about their forecast. So, do we believe their forecast? How are they at forecasting? The last 4 quarters, they beat their forecast, they beat their forecast, they beat their forecast, and they beat their forecast. So, they're pretty good at forecasting. Their track record's pretty good. They went from $215 billion of revenue last year. They're anticipating $372 billion this year. They're anticipating $491 billion next year. And they went from $4.77 a share last year to this year, they're estimating $8 a share. And next year, $11 a share. So 224 divided by 11 is 20-ish. That's a 20 forward PE, not a 200. Even NVIDIA, which has run more than I can, it's almost hard to believe, right? I mean, for those of you who have been doing this a long time, these numbers seem crazy. But the reality is, they're going to make hundreds of billions of dollars in net income. As the biggest company in the world right now, they're expecting 32% growth next year. They're an ultra high growth company at $5.5 trillion. This is what's happening. That's why I'm saying we haven't seen this before. So you got to adapt and adjust. We have not seen this before. Relative to everything else, nothing like this has ever happened. There have been innovations that you could argue the internet was as big or bigger an innovation. The iPhone is one of the great innovations of all time. They changed the way things work. But the money wasn't there like it is for this. There's so much money here. It's justifying these valuations. There are no companies at 100 or 200. In fact, Amazon, after years of being at a 70 or 80 or 90 or 100 PE, this is why I never bought Amazon, because I would not have the conviction in it. Because when I look at 100 PE, I go, it's just, I don't get it. And by the way, they've been here. Over the last 5 years, they're up 63% in 5 years. The stock market, the S&P 500 has outperformed Amazon. Why? Because their PE was ridiculous, which is why I didn't buy it. But now their PE is 31. Their trailing PE is 31. And their forward PE right? They made $7 last year, $8.60 they're looking at this year, and then about $10 next year. So that puts them at, maybe 28 forward PE. Now all of a sudden, Amazon's worth more than they've ever been, and now I'm looking at them going, they're starting to get into a buy zone. I'm not buying them. There's so many things ludicrously underpriced that even this is now fairly priced and probably underpriced. But, it hasn't been decimated, and it got ahead of itself. I think it's the Palantir phenomenon, and I know maybe a lot of you are in Palantir. Palantir got 5 years ahead of itself when it ran to $200, in my opinion. So it may have a run like this. That doesn't mean it's going to go down. Doesn't mean it's a bad company. But it took Amazon underperforming the market 5 years in a row to get to a reasonable valuation. The PE for Palantir is 150. That's after it's pulled back from $200 to $134. So I know there's a lot of Palantir fans, and you're going to see a lot of channels saying buy Palantir. And obviously, again, don't listen to me and don't listen to them. Use your own judgment. Palantir is going to make $2 a share next year. Right at $200, that's 100 PE. I'm not interested. That's me. And it's not that I'm not interested because I don't like high-risk stocks. I've been investing in some of the highest risk, highest volatility stocks in the stock market for the last 5 years. So I'm not afraid of it, but I'm not going to buy it, I'm not buying it at 150 PE. That's my opinion. Just reading some of the comments. You guys are talking about Ethereum and all that kind of stuff. Sourmelon Gaming, thank you. He said, Tom has made people a ton of money. GOAT status, thank you very much. I appreciate it. I try hard. I put a lot of work in to prepping for these things to talk to you guys. And of course, obviously, the members know we go a lot deeper every Tuesday after the market closes on our members only stream. I'm running late, but that's okay. I hope everybody enjoyed this stream. Thank you guys so much for joining us on the stream. And you can smash the like button on the way out. It still helps even though the stream is over. So again, thanks to everybody who joined us. Special thanks to the subscribers. Super special thanks to the members. I appreciate you guys, and I will see you guys Tuesday after the market closes. And for everybody else, we're here every Friday after the market closes. Thanks so much, and have a fantastic weekend.